आप मुझे फिजिकली क्यूज दोगे? आप मैनुअल क्यूज दोगे? या मैनुअल क्यूज? It's live? You give me a cue. Welcome. Well, we've just had the finance minister deliver the interim budget speech, and true to her word, we haven't seen big bang announcements coming in. In fact, this is potentially the shortest speech that she has done. And in terms of the key takeaways and what we can expect from the markets to rein in as far as key insights are concerned, well, I have with me a panel here. I have Dharmesh Kant of Chola Securities as well as Aditya Shah of Hercules Advisors, who will give us a fundamental perspective, and along with them we also have Aditya Agarwal of Invest for Edu, who's going to give us a technical analysis of how things are panning out as far as the markets are concerned. Gentlemen, thanks for joining me. Dharmesh, I'll start with you. Your key takeaways, or rather, even if it's a lack of takeaways, that's totally all right. How do you think things would pan out now?
Thank you so much, Agam. I think this is interim budget is a true interim budget in letter and spirit. So nothing unusual came through. That was a welcome step for the market. And the only takeaway for the market is additional 1 lakh crores of infra spending, which is on top of 10 lakh crores, which the government was already doing. So this is a directional in nature and more of intent in nature. So that has been taken care of well, and she was very clear in sounding it off that in the next budget, a detailed roadmap as to the amount of allocation which will go to different areas which she spoke about will be detailed out. So a good balanced outlook. Fiscal consolidation is the mantra for this budget, and it's not a growth-oriented budget. That's a bit negative, but I think a balancing act played out well by the finance minister.
Aditya, if I can come to you, your takeaways from here?
My takeaways would be that the government is trying to play a round rabbit kind of an innings, consistent and disciplined, trying to control the fiscal deficit, whereby trying to control the inflation, and putting it in the code of RBI that they need to start cutting interest rates as the inflation comes under control. Not a growth-oriented budget as it has already been said, but still the infrastructure spending is a key positive. Over the next 4-5 years, as the government still comes back, infrastructure spending will be a key aspect that we will see, and the government will try to stimulate. So net, nothing to get excited about and nothing to get disappointed about as well. It's a very, very consistent type of a budget that the government has given.
All right. Fair enough. Aditya, we did see a little bit of gyration after the budget on the benchmark indices. That was perhaps expected. But after that, it seems like we're back in consolidation mode, and there's a big crush in terms of option premiums as well. What are you making of the markets right now?
Thanks, Agam, for having the show. Oh, clearly there is a crunch in the options, as you mentioned. I believe as we go ahead, you will see further deterioration in the premiums, especially on the Bank Nifty and the Nifty side, given that today is also the expiry day, Agam. But something interesting is banks are seeing buying after the budget. So PSU banks are something which are witnessing good traction on the upside, and so is insurance companies. So insurance companies and PSU banks, Agam, these are the two sectors which are actually seeing good short covering rally. If we talk specifics, a Bank of Baroda and SBI looks interesting on the charts. So one can actually look at Bank of Baroda can offer you a good 3 to 4% upside, maybe for a target of 280, 290 on the upside. And SBI is something which also is looking interesting because clearly, Agam, if you see, stock has been in a long consolidation phase and looks like it's breaking out from that consolidation. So maybe one can look at a target of 670 on the upside with a stop loss close to about 630 on the downside. So both the PSU banks and the insurance space definitely looks very interesting at the moment.
Right. So, I don't want to jump the gun, and of course we have the general elections which are coming through, but should the NDA be elected again? The finance minister did make some comments that there may be certain things which may be kept for the July budget. That will be the big budget, of course, and of course is assuming that the NDA does come back into power. What do you think the focus would be there, Dharmesh?
See, I mean, she was very vocal and clear regarding the technology-driven and research-driven development. So that is the area where most of action will come through, apart from the continuity of previous policy decisions which they have taken and which they have executed and implemented as well. For example, infra spending or the railway spending. Defense was one area where nothing was said about in this budget. I think when the main budget comes through in July, so more detailed information would be given on there. But only one point to be raised here is 1 lakh crore of research development kind of a loan which the center will provide interest free. So the point here is that at the end of the day, that's a loan which has to be paid by the people who will undertake this activity. So in order for that to be fruitful, it has to be that research and development yields financial benefit. If that is not there, so some incentive, some tax incentive should have been there. I think maybe in the July budget, the detailed framework will be laid out there. I have not seen the fine print, so can't comment much on that as of now.
Right. Some interesting cues there, and I'm just going to pick up from Dharmesh, Aditya. The 1 lakh crore from a near 0% interest rate to the private sector of all the places. What do you think that can be built upon, and also in terms of going forward into the next budget, what do you think that if there are any indications at all from your point of view?
So my perspective is very clear. What the government is trying to do is government is telling we have done our part of the capex. Now the private sector and the state governments need to come in, especially the private sector where the capex has been a little bit lagging. So the government is trying to boost up those sectors. In the coming budget, what the government needs to do is give a lot of incentives on the manufacturing side of it, the auto component side of it, the mobile manufacturing, all those kind of services. A lot of incentives must be given so that the private sector really comes back. So that's the biggest point that I would be looking out in the July budget, where the government, apart from the infrastructure push that it is really doing, we have embarked on a 20-30 year cycle where manufacturing will start to come into India, and that will really transform the economy. So basically the key takeaway of this budget for me is the government is telling the private sector that we will not crowd you out. We are now doing things that will help you come back into the private sector, into the capex market, and slowly and steadily you come back and you take over, and we will slowly and steadily reduce our spending so that our fiscal deficit is in control.
Right. Aditya, positionally speaking, and if I can now start talking about February, because now that the big, event is behind us, how are markets placed at the moment, and can we in fact now expect a good long period of consolidation? What are the charts telling you?
Yes, I believe, Agam. And plus, it's not only the budget, the Fed event is also out of the hat. So I believe most of the volatility that you would have seen coming into just before the elections is out. And as you pointed out, right, markets could enter into a long period of consolidation. Talking of Nifty, on the downside, clearly we have seen 21,400, 21,200 acting as a very good support area. On the upside, 21,900 to about 22,000, which has been acting as a major hurdle, Agam, now for some time, is acting as a hurdle. So I believe markets will continue to oscillate in this band from 22 on the upside to about 21,200 on the downside. Something interesting I'm noticing is Bank Nifty. After that sharp fall post the HDFC numbers, Bank Nifty is showing some kinds of signs of strength at the moment, Agam. So I believe Bank Nifty is something one should clearly eye on, and maybe next week expiry one can look at Bank Nifty, and you could see a good short covering rally at least at levels of 46,500, about 46,800 on the upside.
And not too far away either. But, my final question will have to be around themes. Dharmesh, keeping the budget in mind and even the themes which are beyond the budget, what do you think there is value in at the moment fundamentally?
Agam, I believe the themes which were continuing before the budget are the themes which will be continuing after the budget as well. So electric vehicles, anything to do with that, EV space is the theme to be in. And solar panel and solar rooftops, government has already indicated their clear intention to take it aggressively. Apart from that, infra is the theme to be played out along with the power space. So power, infra, EVs, and two more you can take it in the basket would be something to do with automobiles, ancillary. So auto ancillary is a good basket to look at, and financials definitely is in the offing. So as Aditya also pointed out, public sector banks are looking good. So I think there's a lot of money to be made out there. And valuation-wise, they would be getting re-rated to that of a private sector peers. So everything has been played out, Agam. There's no uncertainty in the market. Earnings have been panning out well. So amidst consolidation, cherry picking and value buying would be the themes to be played out.
Right, absolutely. Aditya, the same question for you. opportunities from here on?
So I want to say that this is a Rahul Dravid kind of a budget, but when the government comes back, it really needs to deliver a Virender Sehwag kind of a budget, because the market and the stocks have really run up, especially within the small and the mid cap space, anticipating a lot of earnings that are going to come up in the next 1 or 2 years. So the first point, the government needs to really deliver. The second point is, all these sectors that we have talked about, defense sector, railway sector, stocks have massively run up over the last 1.5 years. People need to be really very careful of what valuations at which they are buying at. To me, EV, defense sector, power sector are multi-year themes, and not themes where in the short term valuations are really very cheap. Valuations are extremely expensive in these sectors. So people must be really very careful when they go ahead and invest in. There are some sectors where particularly valuations look okay. They're not cheap, but they look okay. Could be the pharma sector, could be the chemical sector. Again, these are very heterogeneous sectors where you need to selectively go ahead and play. But the point is, you need to keep an eye on the valuations at which you are investing into the market right now. A bull market can seduce you into investing into stocks at a wrong valuation. You must be careful. The companies must deliver earnings, and if they deliver earnings, the valuations will continue to stay there. Otherwise, there will be a valuation contraction. So be very careful. Be careful of the valuations and watch out for company-driven performance.
Aditya, you did mention banks and insurance. Besides that, any other opportunities that you see right now?
Yes, Agam, there are in fact multiple opportunities. One sector that we are not talking about is the IT space. And to be honest, post numbers, IT have actually stood out. We have not seen much correction in the IT space. Rather, if anything, we are witnessing good buying, especially in the large cap IT space. And this is something that I've been talking time and again. One should clearly focus on large cap IT stocks. I'm not talking about from a day or two, but maybe at least for a quarter, one should definitely look at large cap IT names. Could be a tech, could be an Infosys, or could be a TCS. Both the stocks should be on your radar. Something apart from IT is the index heavyweight is Reliance, Agam. And if I can stick my neck out and say this, Reliance could be the top performer in the Nifty 50 for 2024. If I clearly look at, and this is purely going by the chart structure, and I've done a good drill down of past 10-12 years of history. If you recall, there was a phase between 2014 to about 2016 when markets were hitting new highs and Reliance wasn't doing much for itself. It was then there was an announcement on Jio, and then stock just rocketed and multifold returns people made. I think similar kind of a structure I'm seeing on Reliance Industries. For 2 years, Reliance hasn't done much for itself, while Nifty has actually shot levels of 22,000. And it's just now that we're seeing Reliance break out of that consolidation, and we just saw 8% pop on the stock a couple of days back, and then again entered into a consolidation phase. So I believe Reliance is headed to levels of at least 3,300 from current levels. I mean, if 3,300 is also taken out, I wouldn't be surprised if actually stock test levels of 3,800 on the upside. So Reliance is something that I'm eyeing and I'm betting big on, and I believe you can make decent money there. Apart from that, IT definitely is one space that I'm eyeing on.
Well, of course, it's not every day that you, in fact, do see a 7 to 8% intraday up move in something like a Reliance Industries. But on that note, well, I'm going to conclude this particular conversation with our experts here. Gentlemen, thanks for joining in and taking us through your views. Well, with that, it's a wrap. But don't go anywhere. There's lots more.